Let's do this. What's up, everyone, and welcome back to the Modern Day Trader channel. This is another weekly review number 8, if I'm not mistaken. And yeah, let's get straight into it. A quiet week, 0 trades for me this week. I tend to see that happen when we get these crossover weeks where a month is ending and another one starts. And that's typically a week where we also get NFP. FOMC is normally sometimes overlaps in that week, as well as Fed interest rate decision. So typically in weeks like that, where the market is doesn't have great structure, or there's just so much volume that it's hard to catch entries, I normally don't see myself taking a lot of pairs. So that's what's happened this week. And yeah, so from a results perspective, results have not changed. Not going to go into detail on that. If you want to see where my results are from a detailed perspective, check out my previous video. That was the weekly review that I did last week. But yeah, high level, that's sitting at about minus 5%. That's start to date on the FTMO 10K account. So we are in about 5% drawdown on that account from a return perspective. But yeah, if you want to see previous 2 trades I took and a bit more detail in terms of what the equity curve's looking like, then be sure to check out that previous review. In terms of missed positions this week, looking over the previous week, and this is an exercise that I kind of started doing perhaps just in a bit more detail from last week. That was based off our discussion in the trading psychology versus technicals sort of video that came out on Friday evening, is backtesting my week in a lot more detail. And so backtesting the week, I picked up on 2 trades that I missed, but in hindsight, probably wouldn't have taken them even if I saw them forming at the time. One was a bit forced, as much as it was valid. The position was forced and wouldn't take that even if I saw it again. The second one, valid entry, not forced at all, but the take profit wasn't aligned with how I managed my plan or set my target. So when I backtested it, it was a 1:8 position, which would have been an amazing trade. But looking at how I set my TPs in my plan, I probably only would have gotten about 1:1, if I'm not mistaken, and I only go for minimum 1:2 for trades. So yeah, I think that's something important to remember when you are looking over previous week, or if you are backtesting position. Just make sure that you are, I think, just staying pragmatic with it. So you see an opportunity, you backtest it, it's 1:5, 1:10, whatever it is. Make sure that you actually would have taken the position, or you would have taken it as per your current plan, because look, there's an abundance of opportunities every single week. But yeah, I think just trying to remain realistic in terms of seeing opportunities and making sure that you would have taken them based off your plan, as well as managed them based off your plan, because sometimes a trade plays out to 1:10, but it actually would have stopped you out at break even, so you wouldn't have been in for the full 1:10. You need to take those things into consideration. So missed trades this week, there were some, but yeah, I think just wouldn't have taken them. So again, it would have been a quiet week, even with some of those positions that did present themselves, but just didn't really match the plan. What I typically like to do on these weeks where it's quite quiet is just look at all my processes in a bit more detail and sort of take note of how well I executed on the various processes. And if you guys remember from my Q2 sort of goal setting video, I walked you through all my trading processes, which are consuming content, forecasting setups daily, journaling each position taken, performing advanced self-review weekly, and well, there's 2 more actually. building the modern day trader channel, and publishing investment research. So those are my 6 pillars of sort of consistency. And when I look at each 6, consuming content, didn't consume much content this week. It was a crazy week at work. When that happens, sometimes, the processes take a knock. And so, didn't do that too well this week. Forecasting positions, pretty consistent with that. I did switch off a bit on Friday. I think just because once I'd finished my London forecasting session, I sort of knew that there may not be any opportunity over the day, because I wouldn't want to be in a position close to NFP time. And so I kind of switched off, even though I did forecast after NFP. But, it's rare that I take a setup after NFP just because of how violently the market moves. There's normally never really any opportunity, but, I still did circle back and look at how price developed, but there was still nothing. So I'd say I did that pretty well. Journaling each position taken, performing advanced self-review. There's nothing to do on that. Well, the advanced self-review, perhaps there was, because I didn't do the detailed back testing, so done that pretty well. But there was nothing to journal in terms of entries. And then what have we got? Consuming content, forecasting setups, journaling, advanced self-review, building the modern day trader channel. We have released what we're calling our bi-weekly podcast that was on Friday evening. Topic was, is trading really 90% psychology, 10% technicals? This is an age-old debate in the industry. You'll hear a lot of people saying, if you can get your psychology right, you don't even need a great plan, because that takes care of your results. That takes care of a lot of your results. Is that true? Is it not? Check out the video. We had a pretty interesting discussion on it. To be honest, neither of us really knew the answer to that question going into the video. So it was really cool, I think, just to figure it out as we discussed it. So in terms of continuing to build the channel, release content as I'm supposed to, pretty on track with that. And then publishing investment research. So this speaks very much to my back testing and the development of my current trading plan. And I'll be honest with you, I was just not on it this week. Part and parcel just due to work being crazy, but to be honest, there's no excuse. That's good enough. Wasn't too good in terms of just sticking to my morning routines consistently, which gives time to my sort of pre 9 to 5 work block, where I do a lot of my trading work. And so I missed a few of those. And then late in the evening was mainly dedicated to journal, which I was quite good with this week. But something had to give because of, I guess, some of those days where the routine was a bit off, and the back testing and the strategy development definitely did. So not good. And I think it's just good to keep note of that just going into the next week, because then I'm just identifying the gaps and seeing where I kind of just need to improve going forward. Remember, guys, quiet weeks are part of the game, unless you are on a very high frequency type of strategy where you're scalping. You want more or less take setups each week. Take them as they come. Don't force positions. There are some weeks where the trading environment isn't the greatest. Typically, I've found close to the end of the month, beginning of the month, or months or weeks where we have a lot of high impact news events. So it was one of those, but I think it's in these weeks where there's actually more time and bandwidth to dial into the processes, which I unfortunately just didn't do this week. And, something to take note of going forward, because you're not active in positions, because there's not as many opportunities. You technically have more time to focus on just working on your processes as a trader. Working on your processes as a trader. And so that is the weekly review. Thank you guys for watching. Please don't forget to like this video and subscribe if there's any value you took away from it. And don't forget, guys, consistency is the choice you make when you decide to do the things you know you should be doing day in and day out.